The Bretton Woods Agreement created two Bretton Woods institutions, the IMF and the World Bank. And the purpose of the IMF is to monitor exchange rates and identify nations that need global monetary support. The World Bank, initially called the International Bank for Reconstruction and Development, was established to manage funds available for providing assistance to countries that have been physically and financially devastated by World War II. Okay, now we're going to jump ahead a bit because I think it's important to really just look a little bit deeper at these organizations. Now, I will just come flat out and say it. These organizations, in my opinion, my assessment, looking at the track record of history, they often do more harm than good. They claim altruistic goals, but sometimes the dream and the reality can be very much disjointed, discoupled from each other. So this is the IMF's website, and there's a link to this in below that you can check out if you would like. But they state right here what their goal is, this, that, and the third. But basically, as I stated, the IMF, they keep those interest rates stable, those foreign exchange rates stable. And they are funded by the member states that are part of the IMF. And what's interesting is there basically is a quota. There's a subscription that they have to pay to be a member. And the subscription is based on the size of the economy. So, that's not necessarily based on the population, but more so what is the volume, what's the GDP, those sort of metrics of this economy. The greater it is, the higher fee they have to pay, but the higher subscription quota, that gets them greater voting power. So perhaps you can see how this is a system that really easily creates a scenario, an environment where whoever has the most money has the most say and thus can direct and guide the agenda of this organization. So what else? They also have this thing called special drawing rights, which is basically a conglomerate basket that they use to back any of the funding that they're doing. And then there's more specifics. We're not going to go super in depth. You can look at these sources, read through it. But the special drawing rights basket is their particular unit of account, and it is comprised of the US dollar, the euro, the yuan, the renminbi, and I said the Japanese yuan, the Japanese yen, the renminbi, and the pound sterling. All right. And the thing that is perhaps one of the most telling things about the organization is that when they provide loans to these different countries, they typically do it with a string attached, okay? And the string attached is what is known as a structural adjustment program. And so on the surface, it makes sense. They come in, they're going to, just checking on time. Cool, we're doing good. So they come in, and they agree, okay, there's a distressed nation, they're going through some economic, unrest, or they're on the verge of some economic crisis, and they come in and they're going to give them a loan. They're going to give them money to try to help out. And so they give a contingency that says, okay, we're going to help out, but you have to do X, you have to do Y. And that on the surface is logical. If you're going to come in and you're going to give somebody, $100 million, $1 billion, whatever it is, it would make sense that you'd want to make sure there's some guidelines in place so that they don't wind up in the same situation. But it also makes this nation beholden to whatever those guidelines are. And so there's three types typically. They are EFFs, which are extended fund facilities, which is a medium-term arrangement by which countries can borrow a certain amount of money, typically from 4 to 10 years. And then you have the Poverty Reduction and Growth Facility, and then you also have the standby arrangement, which is more short-term. So feel free to look into the specifics of that, but basically anytime they're giving out a loan, most of the time it comes in tow with a structural adjustment program, which basically means they have now bought themselves some influence in what happens in that nation, in that country. So do with that information what you will. After that, we have the World Bank. So this is the World Bank's website, and they say right here, what is their mission? To end extreme poverty by reducing the share of global population that lives in extreme poverty to 3% by 2030. And so this also goes in line with Agenda 2030, which is the UN, because these are also organizations under the umbrella of the UN, or they're kind of overseen by the UN. Excuse me. And so then their other mission is to promote shared prosperity by increasing the incomes of the poorest 40% of people in every country. So once again, on the surface, how can you argue with any of these mission statements? They sound so great, but what is the actuality of how these things are carried out? So the World Bank once again, I'm just consulting my notes. They manage the loan disbursements as assistance, and their main goal is to reduce the poverty. So they are a sister arm to the IMF, and the World Bank is technically a conglomerate of 5 different institutions. And so, once again, sometimes you have to dig down the rabbit hole of the separate threads to get a better, more encompassing picture. But that's what the World Bank does. And keep in mind, we're going all over all of this so that one can truly grasp how much control the legacy, the traditional financial system has created for itself over the world. And so, as one begins to learn more about how much control these organizations have in their history and what has been a result of some of their actions, one can better appreciate the freedom, the optionality that comes when you properly leverage blockchain technologies, decentralized finance, trustless capital markets, and the like. So let's keep it moving.